My most recent exit was a company called Island Brands, which is a beer company that was competing against Anheuser-Busch. I sold it to a private equity firm. The way I was able to do that was through equity crowdfunding. Because even though we raised institutional rounds up to $30 million to help fuel the company, we needed to find a way to continue to raise capital, but also, interestingly, this ecosystem allows you to also market your company. It was so successful and we were pioneers in the space that I started a company called Maverick Brands, which now helps other companies crowdfund. So what is regulation crowdfunding? It was an SEC regulation that came into effect in May 2016. A lot of people don't even know it exists. It enables startups to raise up to $5 million. It's a huge change in the securities law that went into effect. That, again, a lot of people don't really know anything about it. But what it does is it democratizes investing. Private equity, and not taken away from any banks or traditional, financing, but those ways of financing can be pretty tough. Equity financing with private equity or VC, venture capital is down now 9 quarters in a row, and it's a really high hurdle to get someone to invest into your company. And so what this does, equity crowdfunding, is it democratizes your funding. So I'm going to explain it, and open it up for questions, but ultimately what equity crowdfunding does is it allows you to market your company or franchise to any individual throughout the United States that wants to invest in your franchise. So the investment can be as little as $100, and it can be as high as $100,000. And they're going to own a little piece of your company, but you're raising capital, but you're also marketing your franchise. And so it's really a marketing tool that helps you raise awareness for your franchise and also bring capital in. But the capital you're bringing in from individuals that can be unaccredited, $100, $500, $1,000 invested in your franchise, those are the people that now are your community that are actually using your service or product that your franchise is putting out. So you're building a community that is your most ardent followers, because that community owns a little piece of your franchise. The great part about it is you maintain total control over your cap table. You maintain total control over your board seats, and really you can name your valuation in terms of, within reason, in terms of liquidity. You can pull the funds as they're invested, and you can use those to help grow your business, scale your business, open other franchises or units. So this is how it works. Where do the investors come from? Well, the investors come from the franchise funder investor community, which is derived from the ecosystem of FCC and a lot of the other Franchise Genesis and other entities within this franchise ecosystem. Maverick Brands, which is my company that does digital marketing and drives investors to your franchise. And then your franchise customer community that loves what you're doing and they want to invest as well. So how can you become an investor or raise capital for your franchise? Go to thefranchisefunder.com and then just click the Get Started button and fill out some information. And that's all you need to do. I'm going to open it up for questions because I'm sure you guys have some. But I appreciate the opportunity that Franchise Genesis and FCC has given the franchise funder today to talk about it.
Yes, sir. I thought you had a special offer for everybody in this room.
Special offer?
Special offer. Did you have a special offer that if the businesses in this room wanted to start with Franchise Funder so that they could start raising capital for their business, that you guys would do something extra special?
Yeah. Well, it all starts with going to the website and clicking get started. We're going to come back to you all in the next couple months and determine who are probably the right franchise candidates for this ecosystem. We're gonna probably pick somewhere between 6 and 12 that we're gonna put into the ecosystem and raise capital for them. You had a question,
How
sir?
about everybody in the room? Sorry to keep jumping in, but how about everybody in the room, you give them one of your concierge people, you get them set up and roll them out so they can start raising money on Franchise Funder today.
Happy to do it.
Yeah.
Did I hear somebody say something? At no cost?
At no cost.
At no cost.
Yeah, well,
That might be a bit of a stretch, but he's the one who said it.
That might be a little stretch. Well, the cost of the money is there is a percentage, but typical cost of capital is far higher than if you're raising capital digitally.
Yeah.
So you had a question, sir?
Any limits on use of funds?
I'm sorry?
Limits on use of funds?
There is no limit on use of funds. If you raise the money, you can use the funds as you see fit. You can also, there's a lot of disclaimers in that, but the law was written to provide small and medium-sized companies better access to capital. So if a company goes public, it's traded on the NASDAQ, New York Stock Exchange, or worldwide, various exchanges, throughout the country and the world. Your stock is not traded, it's owned by the people that invest in your company, and when you ultimately sell your company, it's those investors that end up getting a return on their investment. But it is highly illiquid, so until you actually sell your franchise to either a private equity firm or a venture capitalist. Yes, sir.
So do you group all those small investors in a single limited partnership that have representation within the company? Question one. Question two, what's the care and feeding of that group as you go along?
So, two very good questions. So, there is an SPV, special vehicle, that is put together for each company that raises capital. So it's a limited partnership, and the capital that's raised goes into that limited partnership. All of the investors, whether there's 10,000 or whether there's 5, are treated like one line item on the cap table. And the platform, the franchise funder, actually is the custodian of those shares until you sell the company, and then those disbursements are made to the shareholders.
And care and feeding in the interim?
I'm sorry?
Care and feeding of that group in the interim?
There is a requirement by FINRA and the SEC to provide reporting for the first 2 years after the campaign is closed. It's in the form of Form C that can be, that basically is just registered with the SEC. But, this is a community of your probably most loyal customers that have become owners in your franchise. So for Island Brands, when we sold the majority of the company to private equity 11 months ago, part of what I required for a deal to be done was to carry those investors all the way through until a bigger deal would happen. And so, we actually see it as an opportunity to to engage your community and drive more awareness for your product or service.
Audited financials required?
No audited financials until you raise over $1.2 million. So you actually can raise capital up to $124,000 with no financials. And then you can raise beyond that with financials, but not audited until $1.2 million. Yes, ma'am.
Two quick questions. First one is your company?
I'm sorry, you gotta speak up. I'm 53, but a lot of concerts, and I can't hear anymore.
Does your company need to be registered under does it matter what it is, if it's an LLC or sole?
Good question, great question. The only way you can raise capital in this ecosystem is if it's registered or a corporation. So you can't have an LLC, otherwise you'd be kicking out K1s to all of your investors. Now, you can have an LLC that wholly owns your C Corp, and you can raise capital, and that's the special purpose vehicle, the SPV.
And then the second question
Yes.
was, what's in it for the investor? I know you had said that if you sell, they get their equity and they get like their investment, but if you don't sell, like what are they getting? Like what is it for them?
So if, no different than any other stock, right? So if you buy a stock and the valuation goes up and the company grows and you sell the stock, you make money. If the stock goes down, you don't make money. So ultimately, they're making a bet. Now, keep in mind, this ecosystem that allows you to raise capital from unaccredited and accredited investors, which is basically everyone, okay? That most people are not liquidating their 401k to go long in Juice Fuel. Love Corey, but they're not doing it. But the appetite for the investor might be $500 because they're already a customer of Juice Fuel. They love the service. And typically, when you're raising capital in this ecosystem, the issuer, being the franchise, like Juice Fuel, would give that customer for investing some sort of discount or some sort of perk, if you will. And so it could be a discount for a year. It could be a full Juice Fuel hat. But you could basically put the perks based on the level of the investment that comes in.
Okay, so.
You got another one?
No, I just want to understand that a little bit better. So let's say I invested $1,000 into Juice Fuel, right?
Yes.
So I need to wait until they sell, but what if they never sell? Like, am I able to ever pull out?
No.
Okay.
No. Not unless Juice Fuel wants to make an offer for the stock to the investor and buy them out. So that is a possibility. So when the private equity firms, when we got to the point, I was very fortunate, Island Brands was growing, I did a deal in the Caribbean, and people want to buy Island beer in the islands. But the issue was, a lot of the companies that were interested in taking the majority on and getting involved, they wanted to buy out the investors at a potentially lower cost or at par or not at a valuation that I felt was accretive enough for the people that supported us to get us there. So my first tenet for anybody that wanted to even talk to me about selling me selling the majority of control of the company was, you got to let these people go along for the ride ultimately at some point, which in our case, they put a 36-month timeline, and we're almost a year into it. So within 24 months, those investors that came in for Island, which we raised $6.8 million, and the investors coming in, ultimately they're going to get a return on that investment at a much higher rate than I would probably be able to do, because at a certain point, these private equity firms, VCs, institutional capital, they'll take a Juice Fuel and they'll like completely blow it up, right? That's the goal, is get your franchise to a certain point that you can actually sell it, and then, you know, someone else is gonna make it a lot bigger. Yes, sir?
Are you raising capital from your friends in the community, or is it from?
So that's a great question. But a lot of the capital that comes in initially is friends and family, and this gives a vehicle for them to actually come in and invest. So if someone, you know, if a friend wants to invest $1,000, then they're an owner based on, you know, the valuation that you put in the company. Or if somebody wants to come in for less, I mean, it could be as low as $100. And so it really creates, the reason why this was written in the law is because it's really hard for small businesses and medium-sized businesses to raise capital to scale. I mean, you have to go through all these hoops and you have to do all this stuff. Last year, there was $347 million raised through equity crowdfunding. Currently, brands like Liquid Death are now raising on equity crowdfunding, and other larger companies are raising in equity crowdfunding because it's not just about the money, it's about the marketing. When you put this digital ecosystem out and you put your company into it, it's going out to, you know, everybody. You're not knocking on doors looking for capital. You're actually creating massive awareness for your franchise, and people are becoming aware of it. Look, if people don't want to invest in your franchise, that's fine, but they just saw a 15-second commercial about it, and that might be a potential somebody that wants to get involved in a bigger way and actually, become a franchisee. Yes, sir.
So, could this work, or does this work for non-franchisees? Like I have some clients that are just straight up small businesses.
Yeah, that's actually where this began. So, we actually, Maverick Brands, the reason why I created this is because, I'm a regular guy from Jersey, and I didn't have the ability to, raise the kind of capital that I needed to raise to support the growth of the beer company that I started. And I uncovered this ecosystem. And so that's basically all I do now, is help companies raise capital through equity crowdfunding. And what we found over that $347 million that was raised last year, it's become a little bit segmented. And the segments are basically people raising under $1 million, people raising $1 million to $5 million, and then there's an ecosystem where people are raising up to $75 million. Mr. Gasparini in the back.
Yeah, so I want everybody to be clear when it comes to the investment itself. So it's not just, it doesn't have to be pure equity. You can do debt financing investment into a crowdfunding campaign. It's up to the franchisor what they want that investment to look like that they're putting out in the open market.
That's right. You create you actually create your own deal.
Yeah.
You can raise equity. You can raise on convertible debt. You can raise on a safe note. Any particular vehicle that you want to raise in. This law that was changed the first time in 80 years with the SEC is purely to create an opportunity for small businesses to raise capital. Because typically, if you hobble it together and you get to a certain point, there's some pariah that's going to come in and cram you down and end up taking your company. And that's what these guys do, the bigger guys, the institutional guys. This is an opportunity for people to raise capital from the crowd. And the people that you're actually raising the capital from believe in your franchise. They believe in your business. They're the ones that are your most loyal customers. And so it's a really exciting opportunity that FCC, Franchise Genesis, is now pulling into the franchise space. This is the first equity crowdfunding platform in the franchise space. So it's very exciting to have
Scott,
it
your
here.
team will help everybody in structuring it, rolling it out, with the marketing and so on. And I know we're running a little bit, behind here, but you're gonna be joining all of us for dinner.
Yeah.
So any other questions that you have, you'll be able to ask Scott, directly.
Yep.
And, I've had Island beer and it's terrific. I think I drank the entire 6-pack in one sitting. Good little.
Yeah. Thanks very much.